You know how I feel when I hear a return of 25% more? That's the money going from them over to me. Here goes a fun fact for you. Where did Hawaiian pizza originate from? Welcome to the channel. My name is Dennis, and today we're going to be talking about why the financial sector is one that you should be keeping an eye on right now, and specifically why Canadian banks are fantastic to have and to hold in your portfolio. So let's get right into it today. Like always, if you like the content, leave a comment down below letting me know what you think. Don't forget to subscribe for more content like this and hit that thumbs up button for me. So let's talk about Canada for a quick second. Now, Canada is a beautiful, a gorgeous country. There's a lot of untouched land up there, so just natural beauty, wildlife, lakes, rivers. Think about Niagara Falls, places like Canada in itself is just a beautiful, breathtaking country. A lot of natural beauty is up there. Outside of that, there's also world-class cities, major metropolitan areas. There is a broad and big economy up there as well. I think about a city like Toronto. Canada does have these major cities, financial hubs. Canada has a lot to offer. Here goes a fun fact for you. Where did Hawaiian pizza originate from? Canada. It wasn't Hawaii, guys. Hawaiian pizza originally came from Canada. The reason why, I don't know, but that is just a fun fact about Canada. Outside of the natural beauty, the Hawaiian pizza, the big, beautiful cities, Canadian bank stocks, specifically the big Canadian banks, also offer a great investing opportunity for us as investors. Now I'm talking about the big people, the Royal Bank of Canada, BMO, TD Bank, banks like the Canadian Imperial Bank, the Bank of Nova Scotia. Those type big Canadian banks offer a great investing opportunity. Why? Well, first of all, these banks are run very well. They have very strong boards. The people at the top, they know what they are doing. They know how to run the business. They've been around for a long time. When I look at these banks, I see very strong boards. I see very well-run companies that I'm very comfortable investing in. They're shareholder friendly. As a shareholder, there is two things that I honestly actually care about. Very simple. I don't like to overcomplicate things. I want you to give me money. I want whoever I'm investing with, for the most part, give me money. And I also want your stock price to go up. Depending on the company, these things are done different ways. But if I'm being completely, brutally, simply honest, I want you to give me money and I want your stock price to go up. If I'm investing in a company, I want to make money off of you. That is, in the simplest of terms, what really all of us as investors are looking for is to make money from these companies. These big Canadian banks, they give us a good opportunity to do that for two good reasons. Dividends and buybacks. Like I said, these banks are shareholder friendly. They know what will make the shareholder happy. Giving out good dividends on a consistent basis, increasing the dividends, keep giving us more and more money, and buybacks, buying back the stock so that there's less of the stock is trading, increased share prices. These banks are very good at doing exactly what you want them to do, which is to make you money. Also, very important, they are set to benefit from upcoming events. So I talked about earlier in this video, we should be keeping an eye on the financial sector right now. Now, this includes more than just banks, more than just Canadian banks, US banks. There's other places in the world that have strong banking sectors. I'm focusing specifically for this video on Canadian banks, insurance company. It goes broader than that, the actual financial sector, but Canadian banks specifically set to benefit from upcoming events. As you guys know, inflation is running high right now. There is problems in the broader economy. The Federal Reserve can help us by raising interest rates. Interest rates need to be raised, even though this might hurt specific areas of the economy in the short term. In the broader macroeconomics version of the economy, interest rates going up is for the benefit of everybody right now because of inflation. And now, while this does hurt certain type of companies, certain type of stocks, growth stocks tend to get hurt by this because now the revenue that they're making, more of it is going to service loans. It's not good for everybody, but for the type of stocks that we're talking about for this video, this is fantastic for them. A higher interest rate environment is going to mean more revenue for these Canadian banks, which in turn will mean more money for us as the shareholder. Also, restrictions on dividend hikes and buybacks has ended. It's done. It's gone. Now, as a lot of you know, when COVID first broke out, a lot of governments put a pause on dividend hikes and especially buybacks. Different governments did things different. I won't go too much into detail on that, but just know COVID started. We didn't know exactly how everything would work, so the government stepped in and told major companies, hey, you cannot spend your money right now buying back your own shares, increasing your stock price. There's more important global things going on right now. You cannot do that right now. Buybacks are a great way for companies to increase their stock price to benefit themselves and the shareholder. This was restricted during COVID, and I'm not going into opinion on if that was right or not. It was, and for a while, you couldn't buy back, or you couldn't buy back the amount that you wanted. Those restrictions, they are out the window right now. Companies can continue to buy back their shares. They can raise dividends right now, and these Canadian banks, they are set to do just that. So as a shareholder, this is music to my ears. This is exactly what I want to hear. You will give me more money and you will buy back your shares, so there'll be less shares to go around. So my shares are going to be worth more. The stock price goes up. I get paid more. This is fantastic as a shareholder. So earnings season just ended for the major Canadian banks. As you can expect, there was a spectrum, but for the most part, it was absolutely fantastic. There were buybacks, there were dividend. There were major dividend hikes, and people were talking about how good these dividend hikes were. Let me quote. A man said, "These dividend hikes are so good that it will help them to get excess capital off of their balance sheets." Now just imagine how good that. We have so much money. Raising dividends is the best thing for us to do, just to make it seem like we don't have so much money just standing and sitting around. Isn't that the type of company that you want to be invest? There's so much money that we're investing in technology. We're investing in we just need to give out more money to people, to the people investing in us, because there's just so much. It will take excess capital off of their balance. Now, as you guys know, for banks, the objective of a bank is to make money on their money. It's not to have money sitting there. So for banks, having money sitting there does not look good when you're looking over quarterly results. There's a thing such as return on equity, and I won't get into too much detail about financials, the quarterlies. I do understand this information. I do actually pay attention to it, but I'm not here to make my videos very complex and get into actual numbers. And just know return on equity is one of those financial terms that's very important to shareholders. They want to see that the money that companies have on hand, that they are using that money in a way to benefit the company, to grow. Having money just sitting around is not a good thing. And there's many ways that you could get a better return on equity. Investing in the company for banks, right now, especially investing in technology, because that is where everything is going. Invest in technology. You're always looking at buying opportunities. Who can we buy to where it makes sense? Because the actual place that you're buying, you're taking on deposits, loans, it has to make sense. So these things, they do happen, merges do happen, but you don't see it every single day. Another way to get to look good on paper for your return on equity, give out more money in dividends so you don't have a lot of money just sitting around. This is what we just saw happen with this earnings season. Canadian banks did major dividend hikes, and you saw a lot of buybacks going on as well. So for us as investors, we just made a lot more money, and what we have will be worth more also because of what the buybacks will do. The dividend increases that we just saw in this earnings season, on average about 15%. Some of the companies increased their dividends by over 25 or around 25%. Now, just imagine, they say right now inflation is running at about 5-6%. I think it's actually a little bit real inflation. We won't get into that. But if my dividend payout just increased by 25%, inflation is 5%, my money's worth more. I'm getting more. I'm making more because this company just decided to pay me more for being a shareholder. On top of that, they're buying back their stocks, so there's less of them. So you're paying me more, and what I have will also be worth. It's just good all around. These are well-run companies. The people know what they are doing. It is to the benefit of the shareholder. I'm getting 25% more because they are paying, just because they're paying me out 25% more. On top of all of this, we are about to go into a higher interest rate environment. Believe me, if you don't believe anything I'm saying, believe me that is coming. It absolutely has to fight off inflation. The Federal Reserve needs to do something to slow down inflation, and that is the absolute best weapon they have: increase interest rates. These banks are going to benefit from that tremendously. So you just increased the dividends because you had too much money laying around. Restrictions are lifted. You're able to do buybacks again. And you're going to continue to do that because you're shareholder friendly. You're making more money already. And now interest rates are also going to go up. So you're going to make more money off of interest. This only leads to more buybacks, more dividend hikes, more investing back into the company. Canadian banks are well positioned to do well in the upcoming environment that we are about to be in 2022 and moving forward. Now, I still do believe people should be in growth stocks, technology companies. I love other dividend stocks as well, real estate investment. I'll do more videos about this kind of stuff, but I really want to highlight this specific sector that I see primed to give you solid returns in 2022. I still like growth, especially if we do see a dip in a higher interest rate environment. It'll be a good buying opportunity. I like crypto a lot. I do think that crypto offers the most potential returns in the future, but you can't overlook this as well. Think about it like this. So say you're in the crypto market and say you end up hitting. You end up making a whole bunch of money. At some point, obviously you'll keep some money and you keep some money in growth, but at some point, you take some profits, right? This is what we do as investors. There's some things that we hold long term for really long amounts of time. There's some things that we might only hold for a couple of years. So say you make it in the crypto market, and here goes $1 million, $2 million. Well, what am I going to do with a couple $1 million? One of the first things that I would personally do, not financial advice, you do your own thing, but if you're listening to me, one of the first things that I would do if I came up on a bag of money, let me put some of this into Canadian banks. They're going to give me consistent dividends. They've been doing it for hundreds of years. Let's say a couple 100,000. I'll continue to make a salary worth of money. They'll continue to buy back. They'll hike the dividends. It's a good place to place your money. Still look at growth, still look at crypto, have a good portfolio, be diversified in different areas, but the financial industry and specifically Canadian banks, that is one place that I will always have money because I know that it's going to give me solid returns throughout. I'm not worried about it, ups and downs. Over the long, this is one of those places where I'm going to hold money long term because I know the returns will be there and they will continue to grow as well. If you like the content, leave a comment down below letting me know what you think. Don't forget to subscribe for more content like this and hit that thumbs up button for me. Stay tuned.